I know there's a lot of confusion in the housing market today. I hope to debunk it right for you. Welcome everyone to Real Estate Daily. My name is Troy, and today I want to show the separation in the housing market when people are out there or when media companies are out there and they're showing you numbers. I want to debunk what they're trying to say. Now, I have several articles on those today, but before we jump into it, do me a favor, smash that like button. It really helps the channel out. It gets everything out there, and I'm going to give you the best 5 to 10 minutes in real estate on a daily basis. So let's jump right into the articles. All right. So this is all today, and I got all from the same site, and this is all from CNBC. And it's very confusing to a lot of people out there. I know when I talk to buyers out there, or even talk to, go to barbecue or even the Halloween parties over the weekend, a lot of people had said to me, hey, Troy, I get all this negative housing information, the media is really negative and blah, blah, blah. And I'm saying, well, you got to really depict the difference between them. Number one, there is new builds. So you have new builds and new construction. And number two, you have resale, which means that you've already purchased a house. There's already someone that owned it, and now it's being resold again. So those are the two distinctions. Now, when I look at the overall housing market, this article today, and I think it went off 5 hours ago, it says in CNBC, it says there's a tremendous housing shortage across the country, says Connect One Bank's Frank Sorrentino. So I always say this, and I've been saying now for months and months and months and months. Okay, when everyone looks at how much the properties have gone down year over year, which isn't much, and then how many sales have gone down, which is kind of significant, they never ever, and the media never ever points to how many active homes are on the market. Well, if there is 20 to 25% less homes sold today than a year ago, in October, well, then everyone panics and thinks the world is falling. But what if I told you that there were 25% less homes for sale? Now you would go, well, hold on, that number doesn't seem as bad. And in fact, it seems in line and it's correct. And since we're not seeing these huge drops in prices around the country, well, then it makes sense. Because if we're selling 25% less homes this year over last year, then you would see a significant drop in the housing market, in the values of it. But you don't, and it's because there's a lot less homes for sale. I've said this over and over and over. It doesn't matter what, the media, it continues to come out, and they all live off of negative news, and that's what we're running into. Let's go on to the next article, which is, again, I said there's a separation, right? New home builders versus resale homes. New home builders are here for profit, guys. I cannot stress that. They're only for profit. If they cannot make money, they will not build homes. That's simply how it works. And because they can't build homes, they can't make profit, why? Well, let's go over it. You have labor costs going through the roof. You have material costs going up, and then you have interest rates going up. All three of them just say the builders are like, let me cool off, or let me pivot, which I've seen several articles lately, into rentals, where they'll have a community built of just rental community, which does nobody good. It only does the investor well. It doesn't do your community well. It doesn't do the first-time home buyers. It doesn't do anything. It just makes them want people to be renters, because more money, if you're making good money, they'd rather you rent than you own. So CNBC, home builders say they're on the edge of a steeper downturn as buyers pull back. Yeah, buyers are pulling back from new home builds. Why? Why are they pulling back? Because there isn't any reason to go overspend on a home with high tax rates and HOAs in these communities across the United States. Here in Southern California, you see it all the time. I looked at communities back 2 or 3 years ago. They're in the 400s, very affordable. But as time has gone by, the Lennar or KB homes, they're just, the communities in certain areas have just gone to the 600s, low 5s, early 6s. Well, they got it when there was 3% interest rates, people still were buying. But when they jumped to 7, nobody's buying that, because you're looking at, adding anywhere from $500 to $1,500 a month to your mortgage payment. And it's just unaffordable for new home builders. And they're not going to build homes that aren't profitable. So with that being said, it's a perfect storm. You have just all these things going on. Of course, we talked about labor charges and material charges going up. There's no reason for home builders to build because the government hasn't given them a reason to build. They're not subsidizing any of that. The state of California is a complete mess. They will subsidize the crappiest, terrible things in the world, but they won't subsidize for new home builders to bring in affordable housing. They won't. Because it doesn't bring in votes. It doesn't bring in votes. Same with the federal government. If it doesn't bring in votes, it's not worth doing. And if we continue to see that the housing market is not crashing at all, it's not. What's happening with it? It's really stagnant, completely stagnant. Buyers don't know what to do, but they want to buy. They don't want to keep seeing their rents go up. Homeowners, if they have their house updated and nice, they sell very quickly and they have multiple offers. But if their houses are dated and have that 70s or 80s or 90s look, then it sits on the market and then it goes down because buyers are now more picky when rates went up. If this was in a 3% rate environment, they would sell just as fast. But they're not in that environment right now. And even though our inventory is down, they're going to sit a little longer. I'm saying this much, that I'm boots on the ground. My company is boots on the ground. We do open houses and we just see there's quite a lot of buyers rolling through open houses. You know, we're still seeing it. It's not like they've all disappeared. I'm sitting around watching football games college games on Saturday and pro games on Sunday. Not happening. What is happening is that I'm getting 10 to 15 groups of people walk through in a 3-hour open house and they're interested. But if it's in a great condition, then we get multiple offers. If it's not, then we get people hemming and hawing around and they're saying, well, I don't want to dump another $30,000, $40,000, $50,000 in the house. So with that being said, these articles are only made slanted for a certain, agenda that I'm telling you isn't what the agenda is really going on here. And let me explain a little bit deeper. Now, here's the next article from CNBC. JPMorgan Chase wants to disrupt the rent check with its payment platform and for landlords and tenants. Guys, I mean, number one, the every day goes by, less people are trusting of any bank, period, no questions asked. I mean, JPMorgan is probably one of the least trustworthy banks out there. They've been fined over and over for so many different things. And in fact, last week or 2 weeks ago, Jamie Dimon, the head of JPMorgan, he really kind of bragged about how he has $1.2 billion in the bank and that, a lot of it comes from your fees. He fees you to death. He's one of the biggest banks, and it's fee death. You're only making this platform is because you can go fee people, and you can take a lot of their personal information. You can take data, and then you're going to resell data. You're not doing this as a social event. You're doing this as a money-making activity. Please understand that there are so many better ways of doing things, especially on the blockchain, that's coming to you in the next 12, 24, 36 months, than to listen to this guy who turns around and tells everyone not to buy crypto, and then he's buying it secretly behind closed doors with his other companies. This is a guy who's not here to help you out. He's not here to help out anybody except for his bottom line, which he should. I'm not saying he shouldn't do that, but let's not disguise it as I'm a good guy doing good things. Last Friday, 5 p.m. Here are the rates. 30-year conforming conventional slightly went up about 2 basis points. 30-year FHA went up 5 basis points, which was a little more concerning. I'm still happy to see both of them are under 7%. It's going to be a big week, guys. Let's just be honest. Big week. Tomorrow, the Fed's meeting. Wednesday, they're going to come out with whatever hike they are. And then what the most important moment will be the news conference afterwards, where Jerome Powell will talk about why they did it, and then what the future is happening. Now, I've always told you guys, there's going to be two possible outcomes. One is he's going to stick to his stance that he's been sticking to for the past 6 months. He wants to get inflation down to 2%. It's currently at 8.3. We have a long way to go. Okay. Everyone was betting on 75 basis point rate hike coming up tomorrow. Okay. But I think there's a lot of political pressure that's hitting him right now. And I believe that there's a good chance now there's a 50 basis points. And if there's a 50 basis point raise, okay, it's all to do with the government all over him to manipulate what his thoughts are and not keep the course. And that's exactly what I'm expecting to happen. I'm expecting a 50 basis point and a little bit of dovish conversation on Wednesday, and it's going to make the market go up, and everyone's going to be happy going into the midterm election. And then all of a sudden, you're going to hear him start to murmur how terrible things are, and that, you know, inflation's going out of control, and he's going to have to raise it in December. And at that point, there's nothing you can do until 2024. That seems like the sucker move of all time. We already know. Anyone that's in the industry right now and that has looked at the economy, we all know that the strategic oil reserves will be out in November. Okay, they were down to lowest levels a month ago, and then we had our president turn them right back on because he wants votes. And so our gas prices have dropped. And once he is out, or once the election is over, we are going to see an enormous gas gouge, because we're going to be buying gas from outside of the country, and it's going to be ugly. What happens with gasoline and petroleum is nothing short going through our food channels, going through, livestock, fertilizer. All of it's going to be affected. Right now, we're running out of diesel in the country, so even moving goods around is becoming an issue. There's just so many problems that are happening, but they're trying to put the Band-Aid, on the wound and say everything's okay. We need to have a couple more years of spending so we can fix things. It's just not, at this point, it's just ugly. And I think that we're going to see maybe a little bit of pivot. If they do, we're going to see interest rates go down a little bit, which is going to be a plus. Because if you, as a buyer, aren't going to take advantage of them, be prepared for all hell breaking loose in December, January, and February, because there's nothing holding the Fed back at that point. Guys, thank you very much for joining me. Again, please hit that like button. We'd love to hear also what you have to say. Leave a comment below. I don't want to get too political here, but everything is connecting politically in my business. It's all about the Fed. It's all about the decisions that they make and the federal government makes, and printing money, and the inflation, as well as spending money, is all directly connected to affecting your lives, and especially in the real estate and mortgage markets. Guys, you have a fantastic day, and I will see you tomorrow.